Warren Buffett. His name is synonymous with wealth. He's the grandpa everybody loves that knows more about investing than we do. But surprisingly enough, Warren Buffett has been very open about how he's earned his wealth. The CEO of Berkshire Hathaway is here to teach us how to make millions with just a little money, and even more impressive, all you need is just 3 stocks to reach Lamborghini status. I mean, who needs a degree in finance when you have Warren Buffett telling you what to do, right? According to him, the secret to his success lies in value investing, which involves finding stocks that are undervalued by the market and investing in them for the long haul. And he's not talking about a few months or a year. We're talking about years, even decades of waiting and watching those stocks grow. While most people want to get rich today, those who are patient are rewarded handsomely more than those who don't. Along with having patience, you also have to have persistence and the ability to resist the temptation to jump ship when the stock market takes a dip. Kind of like right now when the recession signals are flashing red before our very eyes. However, some people continue to think that this time is different and a new bull market is coming. So grab your calculators and get ready to take some notes, because Warren Buffett is about to show us how to make millions one undervalued stock at a time. Let's focus on Buffett's investment philosophy, which involves buying and holding stocks for years, even decades, rather than trying to time the market or make quick profits. His strategy is rooted in his belief in the power of compounding. He understands that the longer he holds on to a stock of a high-quality company, the more time it has to grow and generate returns. To find this type of company, as mentioned earlier, Buffett employs a value investing approach and looks for companies that are trading at a lower price than their intrinsic value, as determined by their financials, assets, and earning potential. In simpler terms, by buying these stocks when they're undervalued, he's able to maximize returns when the market eventually corrects and the companies reach their true potential, as he predicted, leading to rising stock prices. Isn't it just amazing how he has this knack for investing in struggling companies and turning them into gold mines? It's not like he's just throwing darts at a board blindfolded and hoping for the best. Instead, he actually takes the time to understand the companies, their potential, and their risks, and then makes decisions grounded by extensive analysis while avoiding the temptation of jumping from one hot stock to another. But buying these kinds of stocks is only part of the equation. Buffett is also very selective when it comes to diversification. While many investors choose to spread their money across a wide range of stocks and industries to reduce risk, Buffett believes in holding a concentrated portfolio of stocks.